I would like to welcome you to today's webinar, Best Practices for Inventory Control Using Dynamics GP. We appreciate you taking the time out of your schedule to join us today. There are a couple of housekeeping items I would like to mention before we begin the presentation. All attendees are in listen-only mode. If you have any questions throughout the presentation, please either raise your hand so that we can unmute you or submit them through the GoToWebinar question box. We will be answering questions throughout the presentation as well as following up after the presentation to answer any additional questions. I'd like to introduce today's speaker. We have John DeHaven, who is a GP Senior Consultant here at Socius. So at this point, John, I believe we're ready to transition the presentation over to you.
Okay. So I hope everybody sees the best practices for inventory control. My name is John DeHaven. I'm also a CPA. And I think we went over and did the housekeeping items already. So just, a little bit of inventory humor is, does anyone have a suggestion for reducing inventory? Our inventory, let's sell it to our customers. Asking would that would work. Feel free to tell the board it's your idea. We've got how can the whole internet be closed for inventory? And then we need to get organized. When you're done taking your inventory, the snowflakes, I want you to count all the fish in the sea. And then the last one is, when I ask what our inventory is, whatever is not an acceptable answer. So my first introduction to actually inventory, I was with a CPA firm and had been doing a lot of tax and compilation work and a little bit of audit, but really wasn't out of the office. And got excited when I got to go to do an inventory for a prosthetics company. And when we went to do the inventory, a lot of their stuff needed to be weighed. So we spent the entire day going through their inventory, weighing things, putting it down, and then valuing the inventory. And at the very end of the day, the senior partner came and asked our accounting manager, did you make sure that the scale was calibrated before you did the inventory? To which he said no, and we checked the calibration and it was off. So we had to come back the next day to do the inventory again once the scale was calibrated. So it's never a fun thing that when you're dealing with inventory. So what we're looking at is we're going to look at the sales inventory valuation methods. We're going to talk about reason codes, talk about troubleshooting cost issues in GP. We'll also be discussing inventory counts, looking at a little bit of landed cost, quantity tolerances, and some of the reporting that's available out there. So when we look at the inventory evaluation methods that are in GP, we've got the FIFO valuation method or the LIFO perpetual method. And that's where your actual cost is posted to the general ledger when the item is received in inventory. And then the actual cost is posted to the general ledger when the item is sold, decreased, or transferred. The average method is pretty much the very similar. However, it's taking the average cost, which if you wanted to know what the average cost of the inventory item was, if you looked actually on the item card, where it said current cost, when you're using the average perpetual method, that's the average cost of that. And then the last one is dealing more with kind of standard cost. And if you're using the manufacturing and doing standard cost. So if we look at how those differ, FIFO or LIFO perpetual and how it's calculated, we see that the FIFO or LIFO perpetual, the quantity on hand is multiplied by the cost at which the item was received. The average valuation, the quantity on hand, is multiplied by the current cost of the item, and that current cost is actually updated, to be the average value. And then the FIFO or LIFO periodic, the value on hand is multiplied by the standard cost of the item. So when we look at the different methods, there's pros and cons for each, and I'm sure everybody here has already made a decision. But if you look at the pros for the FIFO and LIFO, it's easy management and easy, and this was a slide that wasn't prepared by me, but where it says easy management and easy inventory and GL reconciliation. Purchase receipts and stock status, I'll always show the costs which appear in the GL. And then the cost of the sales will be determined by the first or last layer of the receiving. And this needs to look into the purchase receipt detail is when we're trying to figure out where there's issues that are happening. The average perpetual, there's one cost for all sales, which appears on the item card. So that when you're looking at that, that makes it relatively self-explanatory. But backdated posting will affect already posted receipts, which are already posted in sales, which creates, which can create variances. And then when we talk about the periodic and LIFO periodic, it helps if a company wishes to have standard costing for a period of time. But if you are using the manufacturing, the standard cost, you have to do cost reevaluations, which is a little bit more to maintain inside the inventory. So one thing that came out a few years ago inside of GP is reason codes, and the reason codes are attached to when you're doing an inventory adjustment. Okay, and they can be assigned to a line item on the inventory adjustments, the variances, the transfer, or the stock counts. And more of my clients are actually using reason codes because in a lot of situations you're doing adjustments through the inventory, and when someone does an adjustment, you really don't even know why they did the adjustment. So some of the reason codes that are being used are if you're a company where you deal with inventory that could spoilage, I could put for spoilage, for lost inventory, for damage, damage in transit, or just I can determine various issues on why I want to give myself visibility. And then the other thing that I can do is I can do the reporting, and I can include those reason codes in the reporting. The reason codes, if you're actually inside a GP, the reason codes are pretty easy to set up. You'll notice that the other advantage of a lot of times of a reason code is that when I have a reason code and I set it up, I can override the default offset account that's set up in the inventory card. So if I want to view in my cost of goods sold, in this case, spoilage, I can have an account that's called spoilage that doesn't hit the normal offset account for the adjustments that I'm making. And then when you're doing your item transactions, you can go through and you can determine the reason code at that time, and give yourself visibility with that. Now the reason codes, it can really help improve optimize. When we talk about optimizing, it's trying to figure out what's happening with your inventory, surrounding the different adjustments that are made that are what I would consider kind of outside of the norm of doing your purchase order receipts and your sales that are hitting the cost of goods sold. As we go through the troubleshooting the costs, and I'm sure there's going to be questions related to cost, and when you're trying to reconcile to the general ledger, we're going to look at a few reasons why the inventory can become out of balance from the general ledger, reasons why costs can get out of whack, or in the case of if you've been using GP's inventory for a while, I am sure you've had to run the reconcile piece. The reconcile piece is part of your year-end processing. if you're going to be doing a year-end process on the inventory. One of the things that you do want to do is run the reconcile. And then we'll talk about the historical stock status report versus the HITB, which is the historical inventory trial balance. And then we'll talk about the adjust cost utility. So, you know, a lot of questions that we get at Socius sometimes is people are trying to reconcile back to their general ledger and trying to figure out why when they print a certain report, it does not tie back to the general ledger. And the reasons why this can become out of balance are someone does a manual adjustment in the general ledger account. An increased adjustment batch was posted in the inventory, but in the inventory there's a box that's set to post the GL, and someone could have unchecked that box unknowingly when the batch is posted, so it didn't make it over to the general ledger. A decreased adjustment was posted in inventory, but the post box, once again, wasn't marked. So we've talked about that. On an item, if there's an override that exists, you know, it can do an increased adjustment in your inventory for the difference between the original sale cost and a new shipment cost, or the cost variance if you allow people to override in the when you're doing sales orders. The override of the serial types when an invoicing is posting, there's reasons why that can. And then if you're using inventory lots in the sales order processing in inventory, a new lot number was added automatically, then the transaction was posted. This will not create a purchase receipt or update the general ledger with the inventory shipment. And then really a lot of reasons why, a lot of times when you're dealing why inventory kind of gets out of whack is there are times in which, unfortunately, you know, we're talking about when you're dealing with purchase orders and you're dealing with receipts. I've had the case where someone, a client, someone entered a purchase order, and when they entered the purchase order, they entered the actual quantity in the amount field, and no one caught it, you know, not only on the purchase order, but they also didn't catch it when it was received. So therefore, when they posted it, it hit at an exorbitant cost, and then it kind of caused problems that we had to go through and do some adjustments there. And then the other reasons why is if someone made an inventory adjustment, depending on how you're doing your costing, if someone made an inventory adjustment with the wrong unit cost, that can also throw your inventory out of whack. The big thing, you know, we talk about with GP with the inventory is we talk about the reconcile process, because when something happens and you have to run reconcile, this is actually the process that's going to happen when you run the reconcile process in the inventory. Quantities are reconciled first between the purchase receipt and the item serial master file. It then goes to the purchase receipts in the lot number master file record. Then the quantities are reconciled between the purchase receipts file and the item quantities master file. Then it's doing the reallocating in the inventory transactions amounts work, the serial number work, the serial transactions amount work, and then it's also looking at the history. And then from there, it's going to the on-order quantities. It's determining the item quantity, master, and vendor tables. So in essence, what it's really doing is it's going through the detailed transaction records, and it's making sure that all your summary tables are correct, and that you have you're viewing the right information inside of GP. So, and we're gonna actually look inside when we get done here, I have GP, and we're going to actually look at GP, and we're going to look at when we talk about when you have an issue with the cost or where you look at that point. But I'd like to get through and talk about the inventory counts and a few of the other things, and then we'll go inside of GP and look at things. So, I think everybody here has taken an inventory physical counts. In the past, normally what people would do is they would shut down at the end of a period or for a day, and they would do their inventory counts at the end of the year and do a true physical count. What's becoming more popular right now, which makes more sense, is to look at cycle counts. And as if we're looking at inventory, we are looking at the different counts, but we're looking at possibly looking at the stock count schedule. We'll talk about smart lists and integration tools, because there are some pain points when it comes to GP when we're dealing with stock counts. We'll discuss a little bit about data collection solutions that are out there, and then we'll continue on with the count. So when we talk about a physical count, a lot of people call the physical inventory a call to arms, because you are shutting down. It's a forced vacation. There's time pressure to finish and reconcile. There's employee counting stuff that they know nothing about. Does make it a little bit difficult. You have your lost and found, because when you go out there, you'll have inventory items where you do your count and you can't account for it, or you'll have some cases where your inventory you need to add to it because you found that your counts are wrong inside the system. The big thing with the inventory count is that, the physical count is the real results. I haven't met too many people that enjoy doing inventory counts, and we talk about how long does the inventory stay accurate. It depends a lot on a lot of different things, including the processes inside your organization. Okay. Now with cycle counts, typically with a cycle count, you can avoid a lot of downtime. 1 hour or less, because if you're doing it on a daily basis, you can do it that way. Those familiar with the product, typically, because you're doing a cycle count, you can have someone who's familiar with the product actually do the cycle counts. You can count different items each day, count items based on relative usage, frequency basis, proven method, real results, and then number of items to count. So inside of GP, which we'll look at, there is an ABC analysis where you can run that, and it will go through based off of your criteria and populate an ABC in there based off of what you want to do. And then if you do populate that, you could then look at those items that are more frequently counted versus the items that aren't, and then the stuff that you sell less. Okay. So the GP stock calendar, it explains how to create, modify the stock calendar. Accounting rules and inventory control describes how you can specify the inventory accounts for the items. Stock count schedules, if you've ever used it, the last thing I put when related to actually using the stock count in the calendar inside of GP, there are some headaches that are there because depending on the number of inventory items that you have will depend on how difficult it is to do lookups and to go through and make your adjustments using the stock calendar. So what we've done with some of our companies, and if they've elected not to go with a third party to do their counts, but is to get out a smart list and to start their counts, and then once they complete it, we're actually importing the variance into GP, either using Integration Manager, Smart Connect, or scribe. It allows it allows me to do quick lookups. It allows me to put some additional fields on there so that I can look for reasonableness before I actually make my adjustments at that point. So that's kind of what we've done with some of our clients that are a little bit larger, that are not using a stock count or actually scanning software. When we talk about inventory, you definitely cannot. Data collection is a huge advantage if you do have the data collection and you are scanning. You're doing your receivings, you're doing your picking, and everything else related to that. If you do have a data collection tool, it is going to make it easier. It's also going to make it easier with some of the products out there to actually do your physical counts. So the ones, we've got Excelos, we have Panatrack, SalesPad has their own data collection module, and there are a few other ones that are out there. So why don't we, right now, go ahead and, I'm going to go into GP currently before we talk about landed cost, so that we can get a little break from the PowerPoints and look at some of the stuff that we had talked about, initially. So, inside of GP, people that are familiar with it, I have 2015 pulled up. We know that if I come down to my inventory tab, I've got all the different areas there. But we're actually going to focus on a few areas that I've talked about. So number one is the reason code setup. So if I'm looking at my reason codes, I can put anything that's in there. I can put loss, spoilage, or who knows. I was just at a client the other day where all of a sudden they were doing inventory and they found some items that they didn't even know they had. But if we look at that, we can come up here and then I can determine, number one is when I want to make that available through adjustments or variances, and what type of adjustments am I going to make it available for, and then where I'm going to have it access to, if I want to have access to when I'm doing a site transfer or different things at that point, and then define the area there. So a lot of times with a lot of my clients, I consider, variances are when I've taken an account and I'm able to view that, where I've taken an account and I have a variance on there and I put it in there. And an adjustment is the fact that I've really not taken account, I've gone out, the inventory's not there, so I need to adjust it back because I know it's not there, but I really haven't taken a physical count. And that's another way in which you can tell when inside a GP what type of transaction is being had. They both, adjustments and variances, do the same thing. It just gives you a different view inside the system. And then if we're doing our transaction in the inventory transaction, I can go ahead and choose a reason why I'm doing that portion of it. And if if you're familiar with GP, you'll know that if I put the quantity in here, okay, and I put an amount in this for an adjustment, if it's a positive adjustment, it will post with the unit cost. If it's a negative amount, and if it's a negative amount, it's actually going to, and I'm using FIFO, it's going to go look at my layer. So even if I put in a minus here, it doesn't matter if I type anything in this, because that's really not going to go over, because this item I know this item is a FIFO item, and it's going to look at the inventory, and it's going to take out the cost of the item that's the cost layer that's available. So I am going to go ahead and delete this. And if we come home again here, and we look at the fact that any time I have an issue and I really want to figure out what's going on, whether I'm using average cost or whether I'm using FIFO, there's two areas I can look. Typically, if I truly want to see where the cost is coming from, and I pull up an inventory adjustment, and we'll pick on our DRAM here, and we'll go to one of our warehouses that has, see if we have some quantities in here. What I can see is I can see the actual layers that have occurred on that item. And also in this area, and we'll do the phone, since I think it has a little bit more. So let me come down a little bit here. All right, let's go with the on the item here. You can tell that I'm in Microsoft's Fabricon. They updated the date, so it's 2017. But I'm still selling 256 DRAM versus anything else that's in there. But this area is where I can see all the cost layers that have happened and what's going on at that point. Also, this is one of those tools that if I did realize that I did receive something in and it was the wrong amount, I can go in here and change, and this is one of the areas where you don't want a lot of people in here, but I can go in and change the cost at that point. And I could say this one's actually should have been $250. And then when I process that through, it'll make the adjustments and then change that layer in the inventory of what's available and do an adjustment that would go over to your general ledger at that point. So the other window that a lot of people use when they're looking up the information is really has to do with the receipts inquiry, because it pretty much gives you the same view. The only difference is that at this point no one can make adjustments. So you'll see that this is actually giving me my same information that we saw in that adjustment window, but I can't make adjustments. So therefore, I can come in here and I can see what the layers were if it was sold. So you'll notice that in this case, we're looking at that this was an adjustment. And if we come down towards the bottom, you can see, well, I have everything sold here, but this is where, in this case, I've got a 5 that were here, and I have 2 that were sold, so therefore I still have some left. But if I look at this, I've got 2,000 that were at $100, and I've made that mistake. So I can see in the other layers that someone entered the cost in wrong or received in the cost wrong when that was brought in. So I would need to, number one, realize that happened, and then number two, I would have to go back to that inventory adjust cost screen that we were just looking at. And I would go into this area, and then I can come back through here, and let's see where my money on hand is, and scrolling down, here's where I have this amount that's left. So I can come over here and I can say, well, this should have been, it got increased, but not to 100. This one maybe should have been 29.50. Wow. And because this is a unit cost for a periodic item, I can't really do that because we're going to look at the item maintenance, and it's not one of my other cost valuation methods that would allow me to do this. And then I also think this one's serialized, so we would have to fix this one a different way. And at that point, do we want to have any questions related to inventory issues before we look at some of the landed costs, the purchasing tolerances?
The question that I have currently is, where's the stock count calendar?
Okay, so the stock count calendar is if you come under the inventory and think of it as a routine that you're going to do. So there's some different areas that are here. Number one is that I have to set it up. So I have my stock count calendar, and I got to make sure that I can put in my downtime or different things, but that has to be set up. I then come over to my area here, and I go to my stock count schedule because I have to create a schedule. I don't know if I have a schedule in here. So on this stock count calendar, what I can do is I can create a schedule, and then I can do a mass add to that schedule, and then I can tell the type of how I'm going to create my schedule, whether I'm going to do it by site, by an item class, by an item, or like when we talked about the ABC codes. So if the ABC code was set up, I could go through on the ABC code and I can say, hey, take all the items that are code A through A, and then do that in a stock count calendar at that point. And then once I start the stock count, the advantage of the stock count is like when I start the stock count, it actually inside of this table it freezes it, so it doesn't. Typically you don't want people doing anything, but this was the count on this date at this time. So then I can come over and I've created my calendar when I'm going to actually do the entry. I can come into the entry and let's hit refresh. Let me count new. Let me do new here. So I come in here, do my stock, do my count. I want to start my count, start my stock count. Okay. I could print my forms. So I'm going to say I'm going to print this. I'm going to go to the screen. There were no exceptions, so I'm good there. I've got my 2 items that I'm going to count on. And then what I can do from here is if I hit save on this part, I go to my stock count entry, and then I can start entering my information that's here. And I can put what I counted, what's on hand, and then decide on the site and whether I've verified it. And then what this will do, the advantage of the stock count is the fact that it'll actually create the inventory adjustment for me so that I can see that. And if I wanted to see where the distribution is going right here, you'll see the distribution is just looking at the inventory and then the variance account that's on that's set up on the item. Well, that's actually the offset account that's set up on the item. So if we highlight the item number and we go to the maintenance and you're wondering where the accounts are, So it's looking at the inventory, it's looking at the variance account that's here, and if I do an adjustment, it's looking at the offset account that's right there. And then from here, you would do your stock count, and once you get that done, you would hit process, and then that would create your inventory adjustment in there, showing a variance. And like I said, it's a good tool if you don't have a lot of items, but I got some clients that have thousands of items, so therefore this one isn't quite as easy because I don't really have a lookup. I have to scroll through it. So for some of my clients, it's a little bit too cumbersome to use. So they'll either, Blue Moon has a stock count product, Willowware has a stock count product, or for some of our larger clients, if you're dealing with Excelos, you can use either one of those or count it that way. And then my clients that really don't want to spend the money on the software, we actually just do get inventory out at a point in time through a smart list, and then actually from there do the adjustments and bring it in through an integration tool. Any other questions there?
Not at this time.
Okay. So what we're going to do is we're going to talk about a few things that you know, when we look at this, we're going to talk about landed cost. Okay. So if you're not using landed cost, there's a lot of times in this scenario in which you want to include your freight, taxes, or something else in with the cost of your item, so that it cuts some fees, different things. So I can use landed costs so that when I do a receipt, it will actually include in those additional costs and put that in the value of my inventory. The landed cost records, these are required depending on how you do it. Some key information is we'll talk about whether you put a vendor ID in there, but the calculation, whether you want to do the invoice match, whether you want to revalue inventory, and the accounts that it's going to go to. The landed cost groups, really, I use the landed cost groups because I can group things together, and the other thing is that a landed cost group can actually be assigned to an inventory item, so that if I'm doing a purchase order, it'll automatically default in for me when I do my, so I don't have to select it each time. Okay. So entering landed costs is any line item that has a default landed cost group will have a group defaulted on the purchase order line item. When a shipment transaction is entered, we use the landed cost button to appropriate the costs across all the lines that match a particular landed cost, such as freight or anything else. And then depending on how you set it up, and that'll be your decision, is whether I'm going to use the invoice match, so that when I match my invoice, if I am doing it, for instance, to a vendor such as Delta Airlines for freight, there would be a variance created if it was received at a different cost, and then that variance would go through and go to a variance area. So if we look at landed costs inside of GP here, so my landed costs, if I look at the different landed costs that are out there, I'm going to pull up one that's in there for that's US dollar one. So notice that this landed cost, as we set it up, we gave it an ID. In this case, we've decided that what we're going to do is that we're going to do a match at the time, because if I include a vendor, I can then match that vendor when I'm doing the receipt, whether I have a currency I type. And then really my question is, what's my landed cost going to be? Is it going to be a dollar amount per unit, or is it going to be a percentage of the extended cost, a flat amount? If I do want to do the invoice match, and there's pros and cons to that, I can do the invoice match, and do I want to revalue the inventory cost at that point? And then this is where it's actually doing some updating at that point. The other way I can do it is I could actually set up something that I may not want to actually put a vendor ID in here. What I'm doing is I'm saying, hey, look, I know for garlic cups that we actually get freight in that that I can estimate for 63 cents per unit, and I want to add that in there, and I know I'll get a bill from the vendor, but I really don't want to spend the time doing the invoice match. So therefore, I'm just putting it in here to get the cost to it, and then I can decide on what account that I'm going to offset at that point down here. And then if I go to my purchase order entry, and what I also can do is if we look at here, once I have the landed cost, if I go up to my inventory, and I pull up an item, and let's use the 256. So on this item card, what I can say is that if I come over here and I go to my options, actually it's under, I apologize, it's by the site, so I would go to quantity site. Okay, in this case, I'm going to pull up my site. That's the warehouse. And on this, I want to say I want a landed cost group. That is my U.S. Air freight. And I can hit save on that. And then I'm going to pull up the 128 gram. And on this one, I'm going to go back to the same warehouse. And on this one, I'm going to choose my landed cost group. I'm going to choose garlic cups just because of the fact that it's not associated with the vendor. Okay, and I don't have to do a match. So if I come over to a purchase order, if I come over to my purchase order, and I choose my dram, and what I need to do is to make sure that I expand this out. Come over here, choose my site, choose my warehouse. Put my quantity here. And I do my 256. I do my warehouse. I'm going to put 2 here. And then at this point, what we're going to do is I'm actually going to pull this in and I'm going to receive the PO. Because it's actually when you receive the PO is when the landed cost actually hits. And then you'll notice that on this receipt here, you'll notice that I have this landed cost, and this landed cost will get added into my inventory valuation. So Let's go ahead and close that out. And then if I go ahead and post this, then I'm going to do and I go and post my batch. Okay, and we look at my report. You'll see there's the 126, but I've also added 63 cents to that. And I've also added the amount there. And if I went into my inventory adjust cost so that we can look at it, and I look at my warehouse, I can see that, you know, I've actually added that amount into the value of it, the 63 cents, so it's automatically added that value. And on the case of the 256 gram, it's done the same thing where it's actually increased the cost of that because I had two items. So the last step, which because we're running out of time, I want to get to the other areas, would be that if I did receive an invoice from Delta Air or whatever, I could then receive that PO from Delta Air, and then I would have to match it against the POs. And quantity tolerances, you know, it's something that was added a while back. I don't have a lot of clients using it, though I do have one that started using it, because it provides a way to specify percentage overages or shortages on a purchase order when receiving goods. What they were having was the fact that their people that were doing the receivings weren't paying attention, and they would just key in a wrong number, and then they would go in and receive it, whether it was under, and they would have issues where in the very end, it's the accounting department that has to fix everything. So they implemented the tolerances to say, hey, if it's over a certain percentage, I am not going to let you receive it in, and you're going to have to pay attention to what I do. So if the quantity is short within a percentage of the quantity ordered, the line is automatically changed to received or closed, which is kind of nice. We do have some clients where a vendor, they know with that vendor, once they ship an amount, they give them what they have, and then they're not going to ship on that PO again. So if there's a shortage, they go ahead and close out the PO. They go ahead and close out the PO, and this would do it automatically. And in the case of this, if I'm using a quantity tolerance, you can limit the total quantity you can receive over the quantity ordered or the tolerance, and you'll receive a message that you can't enter that, can't enter, you know, anything more than what's supposed to be on there. And then really, when we talk about reporting, the reporting, there's a lot of different ways you can do reporting. Number one is the common reports that are used for GP or the stock status. I'm sure a lot of people use the stock status, the historical stock status, and then the HIT inventory trial balances, and they each have their pros and cons. You know, the historical stock status is, a lot of my clients will try to use that because that's what I'm trying to reconcile back to my inventory. Although sometimes it's considered preferable to do the historical inventory trial balance report. But in a lot of cases, if you implement that, because if you haven't been on it before, you have certain things, unless people in your organization are following things correctly, when you go and you run the HITB, if something got deleted in the general ledger that wasn't in there, you can kind of sometimes show a difference there. And big thing with the reporting is if you're on GP, you are on a product that has a lot of different views that are out there. Victoria Uden has some views that are out there that are free that I'll show you here in a minute. You know, inventory price levels, dates, quantities, things on those with that area. We talk about Socius. We have an analytics piece that's you know, that we've already set up that, you know, hooks into GP that can give you different views of your data related to that. So you can do that part. And then if we come over to my GP here and we talk about some of the I've purchased, you know, 1,000 items. I've purchased 1,000 of these items because in one of the quarters they get government contracts that might come in. So one of the months they had a government purchase for a contract that they might not have. You know, it might be once a year they don't have, so they have to factor that in when they're doing their purchase orders at that point. So we've got a few minutes left, so if we want to answer some questions.
Yes, there are a couple questions. The first one is, where does a user go to access the inventory reconcile options?
Okay. So the reconcile, first of all, qualify things. Anytime you're going to do a reconcile or anytime you're going to do check links or anything, you do want to make sure that you have a backup before you do it. And people cannot be in the system when you're doing the reconcile. So you want to make sure people are out of the system. Technically speaking, sometimes they can, sometimes they can't, but it's preferred that they're not in there. So there's two ways. Number one, I can do the reconcile, is I can come in through the reconcile here, which is underneath my utilities. If you do have a large number of inventory items, there is a professional service tool that is free, that is in 2015, that does a reconcile, but it does it a lot faster than what the one that's inside of GP. So if you do have to do reconciles and you want to use the professional service tool, you can come in here and then you can do the reconciling, and it's kind of a reconcile that's optimized. Next question.
The next one is, can you talk a little bit about data collection tools? What are they?
Okay. So data collection tools, when we talk about data collections, and you saw up there Excelos, you saw Panatrack, and SalesPad has their own data collection. So data collection is the fact that I'm barcoding, you know, the stuff that's in my inventory, and what I'm doing is that I'm receiving the goods in, and I'm actually using a scanner at that point. So I'm using a scanner to bring items in. I'm using a scanner that I can use, that same scanner that's in there if I'm doing a transfer. So for instance, if you're using multi-bin and you're in a warehouse and you move an item from one location to another location, you're actually scanning it and then doing it. And if we talk about inventory accounts, what you're doing then is when you're doing your inventory count, you'll put in what your count is in those scanners. Depending on the product and what you're doing, is that you'll be able to put the amount and do your count in those scanners. And you'll scan the item, and so you don't have to look it up or do anything. And then what you'll do is you'll type in your inventory account, and then do a comparison and do your variances there. So usually the clients are using the scanner it's definitely more accurate because you don't have the manual part of it. And then what you're doing is you're actually doing your allocation there also. So when I go and do a picking list, someone will go out there and they will pick the items, use the scanners, and then what that will do is that will fulfill your actual sales order. And then that once that sales order is fulfilled, you would then go ahead and you'll know that it's been fulfilled and shipped out, and then you'll go through the process to transfer that to an invoice and then go there. So there's different ones that are out there, and associates can help you look at them, and there's definitely different cost levels depending on what you need to do. Someone like Excelos, where you need to do more, would probably be a little bit more expensive than a third party like Panatrack, which would be a little bit less cost, but it might not do exactly what you need. So we can help you look at that.
And those are all the questions that I have in so far.
And we only had an hour, so we had to try to go through somewhat fast, and I apologize, but I wanted to keep things moving and just make you aware of some of the stuff that's in there when we talk about landed cost, tolerances, troubleshooting, and looking at things to try to get your inventory in balance.
Great. Well, there are a couple more things before we kind of wrap up today. You can look at all the upcoming events and promotions on our website at socius1.com. Our next webinar is November 15th from 1 to 2 p.m. Eastern. The topic is Affordable Care Acts for Dynamics GP. And then the current promotion running right now is you can get your first 3 months of hosting charges free through December 16th with K-Commerce. And then if you have any questions, you can reach out to John through email, or you can give him a call. He'll put his contact information here up shortly, but for any follow-up questions that you may have.
Okay. So with that, we'll say goodbye.